At the start of the day, all the banks in the world are party to the same information. It's a question of whether you make the best use of the information during your life. Doesn't look like there's much of a trend at the moment, so as I say, we'll just play the market on people's positions, really, and take a bit of profit out of it.
Welcome to this video today, which is all about key Forex trading lessons I've learned over the last 33 years since I first became involved in financial markets, my so-called Forex journey, for want of a better phrase. Now, it hasn't all been success. There's been some great highs and some horrible lows, and you learn from your successes and your failures, of course. I wish I'd learned many of the lessons I'm going to relate in this video far sooner. I hope anyone watching this video does find the lessons useful. They'll be coming up in a moment. But just before we talk about Forex trading lessons, I just want to go to my motivation for becoming involved in financial markets, and did a little clip on the way in. It comes from the fantastic documentary $1 Billion Day, screened in 1985, and that documentary would set me on my career path. I was just so inspired by the documentary and that guy that you saw talking on the way in, Richard Hill. As soon as I saw that documentary, just wanted to be like him. And I actually want to show a clip of him now. It's a clip that really fascinated me from the documentary. It's only about 1:40 long. And what I really like about the clip, try and guess, why did I want to be like Richard Hill? And it might not be what you think it is. Anyway, here is the clip. Take a quick look, and then we'll be back in just a few moments to discuss in more detail.
I'm going to go and buy a bit of sterling. Looks like everybody in the market might be a bit short of sterling. It doesn't want to go down. 58.63. Take 5.
His first £5 million, and with each wave he buys another £5 million.
Quick, please. I'll go up in a second.
58.68.
A grimace as the price rises.
57.64.
Take 5.
57.64.
Take 5.
What positions am I running with? 58.63.
Take 5.
58.65.
Take 5. That'll do.
57.72.
That'll do.
He's bought £35 million. Brief speculative bubble has burst, but Richard has won again.
So, as you saw, we bought £35 million. So we went up 30 points. We decided to take our profit.
So how much money did you make on that little bubble?
I don't know, to be honest.
Okay, we can get the power.
£75,000.
How much?
About £75,000.
That took you about half a minute. The price just
Took about 3 minutes. 80.85. Good night, Neil.
In the 10 exhausting hours that Richard's been at work, the pound has moved up and down 2 cents. He's made just under £100,000 for the bank, buying and selling 750 million of them. How does he feel about handling such huge sums?
Oh, to be honest, I never really thought about it, because you do it every day. It just comes naturally.
We'll come back up that short clip there of Richard Hill in action, cigarette in hand, calmly and coolly dealing 35 million sterling for Deutschmarks, as it was in those days, making a tidy sum of money for the bank, and then just being so matter-of-fact about it. Just comes naturally. When I saw him doing that, it just kind of fascinated me. Guy, totally on his own, totally responsible for what he's doing. There's nowhere to hide. He's in a pressure environment. He's got no ego. He's very cool, calm, collected, disciplined under pressure, following the process, and then he gets a result. And he did say in the very first clip I did when I started this video, we've all got the same information. Who's going to use it the best? Well, he used it very well. And I think, watching that, what really motivated me to be a trader was just to be in that kind of pressure environment and, competing against other people and seeing if I could come out ahead. I wasn't solely motivated by making money, okay? And traders got a lot of money in those days. That's kind of, obviously we all need money, but it was the challenge of doing it that really attracted me. And I think in terms of most Forex traders, they're not in Forex for the challenge, or they're not really going to enjoy it. They're just in it to make money. Well, if you're in it to make money, it's a very competitive business, and you are unlikely to win because you're not going to be able to deal with what Forex trading is all about. And you've got to be sort of honest with yourself. Do you really want to be totally responsible for what you do? Do you want to go through a learning curve, which could take up to a few years to become a really competent trader? Can you deal with your psychology, your ego? Can you be disciplined? Can you deal with the frustration of Forex trading? It's not a business that suits everyone, and it's mostly psychological. Okay, so you've got to think very carefully, particularly beginners. Most traders coming in the markets want to make money. Well, there's nothing wrong with that, but just work out if you're enjoying what you're doing and whether you're prepared to go through what it takes to win. Competitive business. Now, in terms of Forex trading today, it's changed, obviously. The dealing rooms are long gone, the computers have taken over, and now I'll be trading in a totally different way. It's a more kind of sedate way, a more gentle sort of trading, but still something I enjoy. Still a challenge to try and work out if you've read the information about Forex pairs better than other traders. It's still a challenge, still enjoy it after all these years in a different way, but I still really like doing what I do. So lesson in life really, anything you do, if you do it and you're passionate about it and you really want to succeed, you will succeed. That applies in any business and Forex trading in particular. Right, let's go through some more lessons. I've actually written them up on a storyboard and summarised the key lessons against the various roles I've had in the financial industry over the years. Let's take a look at them in more detail. Right, first of all, in terms of when I started in trading, it was in financial sales. It wasn't as a trader at all. I felt it would just be a good idea to get in the industry first, and then I'd meet people, then I'd probably get my chance later on, which I did get. But to start off in financial sales, and it was at the time of the Big Bang in London. It's where basically the financial markets were opened up to everyone rather than elite few. And the first thing that struck me when I got to the brokerage was the amount of barrow boys making loads of money. Okay, now in terms of barrow boys, it's just kind of a nickname at the time for people who didn't really have necessarily a university education or any real formal education at all, because there was a big number of people trading at that time who'd come from the fruit and veg markets of London and Covent Garden in particular. So from fruit and veg stalls to financial markets. I can't remember why so many of them ended up in the city, but they did, and they were making a lot of money. Okay, which just goes to prove that intelligence is not a prerequisite to succeed at trading. And I just thought the city would just be full of kind of university graduates and nerds. It wasn't. I mean, they were obviously there, but a huge amount of the barrow boys are making a lot of money. And in terms of intelligence and trading success, could be a hindrance as well. I always wondered when I first came in to this sales operation in the brokerage, why I was always getting lists of dentists. I seemed to get endless lists of dentists to phone up and close, to open accounts at the broker. I did get a lot of doctors as well, architects, etc. But dentists, just always remember endless lists of them. And I did ask my sales manager, why do I get so many dentists? And he goes, well, basically, they're intelligent, they've got money, they're going to make horrible traders, and they're going to make us a lot of money. And there's a lot of truth in that as well. And this is where intelligence can actually work against you in the markets. Now, nothing wrong with being intelligent, you can make money, but you mustn't come in with the attitude, I'm smart, with an ego, because then you're going to do all the wrong things, argue with the market, want to be right. This is what these people did. They're going to trade a lot. When they lose, they're going to trade even more. Revenge trade, make a load of money for the broker. they just can't take the fact that they're wrong. And yeah, I know it's said frequently, but the real route to trading success long term is to swallow your pride, swallow your ego, take your losses, keep them small. If you've got a strategy with an edge, your time will come. Now, in terms of point number 2, 50-50, this 50-50 is a real problem, even today in the markets. And I mentioned people who've just come in wanting to make a lot of money earlier on and not really that interested in Forex. And the reason they very often think it's easier to do than it is because they look at Forex pairs, they think, well, 50% chance it goes up, 50% chance it goes down. I've got a good chance of making money. But you haven't, have you? Because there's volatility involved. Now, of course, it's possible to have that lucky trade you're over leveraged on and make a lot of money out of it. It's possible. It's not probable, okay? And if you are over leveraged, I know it's said frequently, you'll just end up losing money. You get rich slowly in Forex trading. That 50-50, a lot of people coming in the market just don't think closely enough about it, and that it isn't a 50-50, okay? Now, in terms of, achieving success in the markets, always got to keep in mind the obvious is wrong. And I was quite naive when I came into financial sales. You're closing these people and trying to get them to open accounts, and they'd normally give you a story. So it'd be something like, Bank of England will be raising interest rates probably tomorrow. That means if interest rates go up, then sterling will probably go up as well. Retail clients, oh, that sounds very logical and probable. I'll have a go at the trade, and then the trade goes wrong. Of course, if it's obvious, it's obviously going to be wrong, and you've got to work out what's discounted in the price, okay? Because if everyone knows that the Bank of England are probably going to raise rates, it's known. Market is not going to accommodate the herd, okay? And I think in terms of trading successfully, your real challenge is to work out what's discounted in the price, take a very contrary, uncomfortable view on sound logic and go with it. The best trades, I've said this in numerous videos, are very uncomfortable. So you've got to be aware of the obvious, okay? We've all got the same information, as Richard Hill said, look at. That's how we make use of that information that counts. Now, what do brokers really think of clients? I can say categorically that every broker I've ever worked for or consulted to just basically has the view that, they're just going to lose their money. They know the 90 statistic. 90% of traders lose 90% of their money in 90 days. They know that. They're going to make a lot of money out of that. If they can make a little bit more on top in dealing fees and so forth, even better. So they want traders to trade. In the time when I started out, it was done on the phone. Salespeople would encourage clients to trade. Today it's a little bit more subtle. I think the telephone has gone out of it. Brokers put up a view of trading that just is simply not true. So you're going to get, for example, come and learn the secrets of trading with our experts, or learn these technical trading strategies that can win. It's all just conventional investment wisdom, which is going to get you nowhere. Okay, and I think brokers, they portray Forex trading as a kind of business that anyone could do pretty easily with their help. Nothing could be further from the truth. In terms of brokers, you don't have to take their advice. You just use them to clear your trades, and if you do that, then they offer you a superb service. Even market makers do. A lot of rumours, mentioned this in previous videos as well, that market makers pick off your stock. They don't bother. They just wait for the 90 statistic to kick in. They obviously want you to trade as much as possible, but if you make 900,000 on every million you bring in, that's a great business model, isn't it? You know the rules when you come in. You know the majority lose. You know you can win if you want to. You just got to get out of the mindset, really, of the losing majority, because the strategy that you can use to make money, or a strategy you can use to make money, is very simple. Trading and running a broker. Did move on. I did get to trade at a broker, and I did get up to being a director of that brokerage as well. Yeah, I thoroughly enjoyed the trading on the desk, the camaraderie of it, the big events we had to face when things go really haywire, like 9/11 or the Asia crash. Yeah, great days. Long gone, alas. But also, when I was there, I was put in charge of doing margin calls. Okay, how emotive is money? There is an obsession with money, and it can really make people get out of control. That's why it's so hard to deal with money under pressure in trading, and why discipline is so important, etc., which we know. But margin calls in those days were not done by computers. Okay, you knew most of your clients. You'd seen them face to face. They very often come to the office, and I had numerous people. You'd summon them to the office. If they had a big margin call, tell them to deposit money, tell them you're going to cut out their positions, and then you can see emotion really kick in. Okay, I've salted a couple of times. They've been called numerous names I won't say here. Just go crazy. And in terms of people, a lot of these people were kind of intelligent people. They just lost it. They're in an industry, right, where you've got to be responsible for what you do. There are rules and margin rules and margin rules. I just want to avoid responsibility and basically, give them more time. It will come back tomorrow when you as a broker may be sitting on a 10,000 loss and they're asking you for time. You've got the risk, they haven't. They haven't obeyed the rules. Cut out their trades. I used to cut out everyone's trade, to be honest with you, if they had a margin call. It's just a sensible thing to do. But you have to accept the rules of the game and you have to be responsible. If you're constantly making excuses in the Forex markets, the broker, I was only a bit over margin, he took out my position, I'd have won otherwise. Look at that. No one could have seen that happening in the market. Oh, that wasn't my fault. Guy who sold me the strategy or gave me the strategy, it's just a rubbish strategy. If you behave like that in Forex, you're never ever going to learn from your mistakes because you're just delegating responsibility away. It's only when you accept full responsibility for what you do, you can learn from your mistakes that you're inevitably going to make and then become a decent Forex trader. Now, in terms of point number 3, the NAS engineer and the auto trading strategy, we had a guy and he wanted us to buy his automated trading strategy, and he was a smart guy. He was an ex-NASA engineer. He'd helped with the moon landings. He was from Harvard. He was bright. He was arrogant. I personally didn't like him. And he told us about his strategy. It was very complicated. It was clever. We decided to take it on and test it for a few months. We tested it for 6 months. Didn't make money in a single month, and many of those months were good trading months. It was just way too complicated with the number of inputs it had to generate the trading signal. And if you've got a trading strategy, you should only have a few inputs. 2 or 3 is plenty. Okay, the more complicated you make your strategy, the more likely it is to break. So we never did take on the strategy, and I did have the pleasure of telling the guy that we weren't going to do it because I didn't really like him anyway. But I'm even surprised today how complicated traders make trading, and a lot of traders still believe in auto trading strategies or set trading strategies that simply don't work. Running a brokerage, this is a bit of a mistake actually, looking back. Decided to quit where I was and set up my own brokerage, plunge all my money into it, and basically do everything. So I was transacting client orders, so traded on execution only basis. I had a managed fund. I was doing research. I was doing a lot of things. But it was the managed fund that really caught me out and gave me just a massive loss. And I put this time it's different, and I think you often see this. You trade well for a period of time, or traders do, and then suddenly they blow up, and they blow up because they think this time is different. And I did as well. I had the managed fund, made a loss. I've done a full video on this. I felt really responsible to the people who give me the money, so I didn't want to admit the loss, although of course I should have done. I ran the loss. It got out of control. Then it got so out of control, completely smashed the fund. Fund went down, put my money to cover the loss. That's it. I'm broke. Business gone. Everything is gone. And real consequences of out of control losses. I think it's something that you tell people, do not let a loss get out of control. And I think everyone, to a degree, will do it. Great traders often say, yeah, when I let the loss get really out of control, that was it. I then became a successful trader. It's kind of real change to the way that you view the markets. I'm not saying every trader is going to take a big loss, but if you read up on the trading greats, most of them did. They said that changed their trading forever, because you're always going to come money management first. I think it did that for me, to be honest with you. Anyway, I decided to get out of the industry. And obviously, it was a horrible experience, because when you have that sort of loss, it's not just a mental thing, it's a physical thing of being ill, just the way you feel. Just needed a break from trading, so I went off to other stuff. But I was going to come back to the industry, and it was a friend of mine actually who said he wanted a course written. And I was actually thinking, well, actually, writing a course, that sounds pretty stress-free, and he was prepared to pay me a good sum of money to do it. He was saying, I'll sell 10,000 of them easily, so should make some decent money out of it. And I doubted whether he could sell 10,000, but I had to put the course together. And my trading previously had not been using so much a technical strategy first. It was more fundamental sentiment towards them. Technicals, kind of third down on the list. Now to devise a technical strategy. And okay, I had a little bit of experience, obviously, of the market, so I managed to put it together in under a week. Okay, it's a very simple strategy. It's the one, obviously, I still have today, which is online. And I would say that any trader can actually devise the strategy very, very quickly. Okay, it took me a week. Less experience might take you 2 or 3 weeks. It doesn't take long, because strategies do not need to be complicated. And it works, the strategy. But people very often ask me, what's the typical performance with your strategy? And this is a mistake as well. There's no typical performance with a strategy, because you've got to make it your own. You've got to decide how much to bet, when to take your profit, where to put your stop, etc., etc. And you can't follow anyone else, because you'll never follow them through a period of drawdown, okay? Because you don't know why they're doing what they're doing, so you just won't follow them. So there's no typical performance. There's people who've bought the strategy, who've done extremely well with it. There's other traders who haven't. Why? Could be various reasons. It's probably their psychology. But there's no typical performance with the strategy. Okay. In terms of the course, the publisher did sell a lot more than 10,000 actually. And then I went off and did it on my own, which I still do today. I think today the strategy, the technicals are important, but there's a lot more weight I put on sentiment as well. So it's really sentiment and the technicals. That's really due to the changes in the market. The internet coming around changed trading dramatically, because everyone's got the same information at the same time. So retail traders have got it at the same time as the big boys. So the blocks of money coming in all come in together. You get a lot more false breakouts, so the price moves forward and then comes back. The volatility has dropped. The noise has increased, because you've got the machines now, HFT traders who go and pick off retail clients, which I've done videos on. If you're unaware of how the HFTs work, you need to understand how they work to make money at Forex trading, because most retail traders don't, and the retail traders will end up giving their money to the machines. So the internet, big change, obviously, like I said, dealing rooms long gone. Concluding, I'd say, if you come into Forex trading, you accept its big boys rules. You accept the rules when you come in. You accept you're on your own, okay? You're responsible. You're going to do it on your own. Forex trading is so simple, though, okay? Strategies, just so easy to get a strategy that can make money. Anyone can do it, okay? Curtis Faith, one of the turtles, made this point that Forex trading is actually so simple. It actually makes it hard for most traders to do. They won't appreciate that it is mostly a psychological game. Forex trading is about 90% psychological, okay? Simple strategy and the right psychology will make you a winner. It takes practice, though. You've got to be very counterintuitive. Like, you can't use technical analysis in exactly the same way as it's taught in textbooks. You've got to put a twist on it to get you out the way of the majority of traders who lose, which we've done plenty of videos on. Got to know that edge, not in terms of just thinking why a strategy will make money. You've taken it from someone else. You've got to have researched that edge, proved it to yourself that it will work longer term. And basically, if you don't, you'll never make money. You must know that edge is sounding base. And too many people do not research the edge of a strategy. They'll take a strategy from someone else that's based on unsound logic. You've got to always be alert for the ever-present mindset traps. I got caught in this time. It's different. Other traders over the years I know have been caught just that once. If you're caught just that once, then it can lead to disaster. So you always have to be aware of your psychology, always be disciplined, and basically just stay on track, okay? And do not let the Forex markets trap you, because they will. And I think people just underestimate the psychology side of it. I've done so many videos on psychology, you can look them up. I'm Richard Hill. He just inspired me. Thank you to him. Just a few lessons there that I think hopefully will prove useful to traders coming in the markets, especially. And what I'm going to do now, just finish up with Richard Hill's manager explaining why he was so good. And it is really a secret of trading success. Well, not really a secret, but it is the way to Forex trading success. Thanks for watching the video as per usual. Take care.
He's the best in the world because he has learned his trade the hard way. He started getting the sandwiches when he was in his early 20s, and he was kicked about by the other dealers, and he has no ego whatsoever. If he's wrong, he knows he's wrong, he will cut out, and he will say, I had enough, I'm not going to beat the market. And he's there to work for Barclays Bank, not for his ego. And that's why he's so good.
64. $half $1.64.